All right. So I have with my I have with me a very special guest who was courteous enough to come on. He is a mental health expert. He is a therapist, neuroscientist, um, and many others, and most of all, a Hex OG since
That's right.
since day one, right? We
Day
have
3, actually.
day
Yeah.
3. Sorry. We have with us Maddie Allen. I think there's not necessarily not an introduction is not needed because
Well, thank
everyone I
you.
think certainly knows who you are.
Yeah, thank you. I really appreciate the chance to talk with you. I see that you're an up and coming crypto and Hex channel. And so, yeah, I'm excited to see the conversation that we'll have today.
Yeah. How does it feel to be an OG? Would you have thought that it would only taken maybe 2 years to become an OG?
Well, yeah, I mean, I really got into crypto when the price of Bitcoin passed to the price of gold in the summer of 2017, when Bitcoin was 2,500 and did a run up to 20,000. And so by the time I had actually scaled into my Bitcoin investment, I was, and the time that Hex launched, I was down about 60 or 70% on my life savings.
Oh my gosh.
And so it's yeah, to be a Hex OG, like if you survived all of the 70% dips that happened in Hex, there's been 7, 8, something like that. And then you had to survive all of the double-ins that happened. Hex doubled like 10 or 12 times or something. So so a lot of people sold when the price went down, and a lot of people sold when the price went up. And then there's us weirdos that are still around today because we time lagged.
Yeah, that's really the feature of Hex that really makes it so special. That's actually an interesting question. Like, what's really harder? Is it harder to hold the rip or the dip? That's speaking
I
of
think it
that.
depends on the individual and their individual goals and stuff like that, individual psychology. And I think a lot of times people buy and sell based on just what's going on in their life, on an emotional side of things or financially. I mean, there's a lot that goes in, I think, to people's decisions and their risk tolerance and what they can stomach.
Yeah. Yeah, absolutely. So I guess I figured we'd start it off with broader markets because from what I've seen, it seems like it's become so big that it has, for better or for worse, gotten tied into the broader markets and things like that. So I guess what's your broader market thesis right now? We're at a time of high inflation and the Fed's tightening. Um, so do you think inflation will top anytime soon?
Yeah, I mean, like, I'll just get out of the way that, I'm not an investment advisor. I don't give financial advice. And for me, I'm just learning. I'm building my own education. I've been learning about crypto now for 5 going on 6 years. And I mean, now I'm a full-time person who gets to help educate others, organize things in the community in a decentralized way. And I get to do what I'm passionate about, which is building things in crypto and understanding how things work. And so, of course, the macro is a really important aspect to me, because to me that represents the monetary environment that everybody is operating in. And so I look at the macro more from like a really, really broad psychological perspective. I'm not trying to time the market. I'm trying to understand, like, how is it that when the world goes into a recession or a depression or a period of abundance, how does that affect people's mental health? How does that affect people's psychology? And I think the more stressed people get, the harder it is for them to, like, pay things forward, to give back to others. I think with, like, like a populist streak that's happened in the past decade with politics, and then trying to correct from that. I think that there's a lot going on in the world that people are reacting to, and so but from what I've learned about economics, like the psychology of what's going on right now is the Fed printed a lot of money, and then some of that money got into the hands of regular people. And until those regular people stop paying higher prices for things, the Fed is going to keep kind of like pushing the interest rates higher. And when they push interest rates higher, that sucks money out of investing, because it treats money better. Like, money goes where it's treated best. And like, if you can get 4% on your savings account, or I guess not at an individual level, but at an institutional level, then that draws money out of what the Fed, I guess, is saying is an overheated market, because they're trying to target jobs and inflation. And so when inflation, and of course, inflation is when people keep paying a higher price for something, whether that's because there are less goods and services being produced, like, or just there's more, so there's less supply, or there's more demand. And the demand side of the equation has to do with how much money people have, in a way. So I think that probably until the NFT guys go broke, then people will keep paying higher prices for things. But I say that a little bit jokingly and a little bit serious. I actually haven't researched like how many NFT guys there are and whether they could actually have an effect on macro. But if you think of like anybody who invested during the major dips in the past couple of years, lots of retail investors have made a lot of money. But then you look at like what the savings rate is for the United States, and then the amount of credit card debt, and we can already see that that's increasing now. And so I think that the pain will continue longer than most people expect, and then it will be over kind of in the blink of an eye looking back.
Yeah, that's he makes a lot of great points about the NFT. It's interesting. So the I don't know the exact numbers, but I did hear the NFT that Jack Dorsey sold for his first tweet. I think it auctioned at over 1 million or 2 million, and I don't think it could have even sold for even 1,000. So
Yeah.
bullish, bullish on crypto. But yeah, you make a lot of great points. In one of my videos, I actually talked about the Fed monetary policy, and I did say that an inflation top is inevitable. And the reason for that is, you've alluded to that as well, is that eventually, if prices keep on picking up and the salaries of the people in the middle class, they don't pick up at the rate of the prices of the price rise and inflation, they're going to stop paying for those goods, and it inevitably has to come down. And I think people right now are just caught in this state of it's like the same way people are caught in that state of euphoria when crypto's going up, like it's never going to go down, and I got to get in, I'm going to miss it. I think people are like basically in that same state, just in the opposite. It's just basically the opposite. They're in the state of, oh, inflation's going up, it's going to go up forever. Market's going to crash more, and eventually that stops, and a lot of people get left behind. So I guess more towards crypto. Do you still believe in the 4-year cycle? Because I know a lot of people, they're attributing the crash of Bitcoin to the Fed rate hikes, but it also happens to be very in line with the time frame for which it's supposed to top out based on the previous 2 run-ups. So I think, do you still believe that it is intact?
I don't believe in anything. I think that we're in a different monetary environment now that was supposed to be proven that crypto would do better, but it's not doing better. And so that's one side of the equation. The other side is everybody says this time is different for every time, for every measure, and then it's usually not different. Yeah. So I think that as Bitcoin dominance goes down, And as monetary policy changes from a 10-year period of monetary expansion to, we don't know, maybe a year or two or more of monetary contraction and then maybe expansion again, it's anybody's guess. But I think that there may be less of a 4-year cycle. The one thing I'll point out here's a cool thing is that there's a lot of money still in stable coins. That money could have been taken out of the crypto ecosystem, but it's sitting on the sidelines waiting to buy the final capitulation. And so you don't always get a final capitulation, but I think from what I hear, a lot of times you do. And so it could very well be that the broader market still has more pain to experience. And then, and then maybe that money on the sidelines is a good indication. Maybe it moves out of crypto. Maybe that money gets scared off the sidelines and into the bleachers and out of the stadium altogether. It goes back to the legacy banks, or maybe it goes back into crypto. But for now, it's still sitting on the sidelines, and that's one thing that I think people could look at.
Yeah, and that's after I think this was the fourth 75-point basis rate hike, and you still have all that money in stable coins. That's a really great point. Also, I don't know if you watched Powell's last speech, but it seemed like this could either have been the last 75 point rate hike, or there could be one more. It did not seem like they were going to continue doing it, and that just coincides with the bottom of crypto normally happening around this time in the cycle, which is very interesting. It's very interesting how things all fall into place. I don't know, what are your thoughts on that?
Fed speak is like very specific. There's some great Planet Money episodes, I think, and different podcasts I've listened to over the years about like how particular the chairman of the Federal Reserve speaks, because the market really does react to that because it's such a powerful force in the economy. I think that I just read a couple summaries. I watched the last one, but I didn't watch this one. I think that they hint and they dance around and they kind of nudge back and forth between what they're going to do in the future. And so what I read was that they're going to keep raising, and they could keep doing that for a year or more. But people should just go and look up what the exact phraseology was, because that matters.
Yeah. And that's really why you just got to go with the best horse. You can't really think about where we're at in the cycle or the macros. I mean, you just really got to research the best crypto that there is out there, and based on the metrics that you'd use to research good crypto, you just got a dollar cost average, because it's just the opportunity is too big, to just get all caught up in these little things that in the long run don't really matter, because if it's a good asset, it's going to go up over time. That's really what I think.
That's what I did. I bought all the way up from 2017, when Bitcoin did a 10x, and then I bought all the way down when it went down 70 or 80%, and then it's just that's normal. Like you say, the dollar cost averaging is a great strategy. What was the other thing I was going to say? I think the cycles. So the top was really easy to call the last two cycles. In 2017, it was the day the CME group, the largest exchange in the world, well, their subsidiary is, CME group launched Bitcoin contracts. They launched derivative contracts or something. So that was the top on the day for the 2017 cycle. And then the 2021 cycle, it was the day Coinbase did their IPO for $100 billion. And there's a new documentary out about that really, I think, sucks. but is worth seeing.
Well, I didn't see the documentary, but I saw you covering the documentary, so I think that was good enough. That was an excellent video,
Cool.
actually.
Thanks.
Yeah, and that was the top, but then there was another top, and that's when, I don't know, that's where people really got messed over, because they thought it was such a given. Oh yeah, we're going to 100K once it, made this slightly higher high. And I remember I bought Hex at the top, and I was thinking it's decorrelated, whatever. And then Hex, during the second top of Bitcoin, Hex didn't make a new all-time high, and I was time locked, and I was like, "Oh, Richard, I could have made so much more money in those other cryptos." And then it was going 100K for sure. I would have been rich, and then he's right again, as always. So yeah, that was very interesting.
Yeah. I mean, so when Hex launched, like, Richard pointed out that there had been a similar launch with a different crypto, and that people who bought on day one did really bad.
Yeah.
And so there was, like, in the community, there was like a big push, like, to, like, not do day one FOMO. Day one FOMO was like, you shouldn't do that. So a lot of people like me who knew about Hex before it launched, like Richard was telling people on YouTube, like, it's not ready yet, so check back in a week, check back in a week, check back in a week. And so I was checking back every week because I didn't want to buy on day one. I wanted to buy after that. And so that's why I ended up buying on day three. It was, and I some small amount, super small amount of money at the time. But it was like, I started dollar cost averaging in on day three. And but the point is that the people who bought Hex on day one went down like 70 or 80% by day 33. So it was like, it's really hard to time anything. And so that's fun to learn from.
Yeah. Sounds familiar though, it's not ready yet. It's not ready yet.
Yeah.
Sounds awfully familiar, to something that's happening right now. But we'll get to that. But I wanted to start off with Hex, and I wanted you to just talk about Hex and your favorite aspects, what really separates it from other cryptos, and what makes it special, and things like that. So,
yeah. Well, Hex is a cryptocurrency where you can pay your future self by time locking. And I think that that's really special because it's like a superpower that you give yourself that you wouldn't normally have. And one of the biggest slogans in cryptocurrency has always been HODL, hold on for dear life, which goes back to like a blog post somebody made many years ago where they misspelled hold. Like, we need to all hold. And so the whole ethos around like HODL has kind of been corrupted over the years too, because people will tell you to HODL things even if they're like pump and dumps or something.
Yeah.
And it's actually pretty hard for people to like differentiate between pump and dumps and like good crypto, because the blue chip coins, like Bitcoin and Ethereum, they drop 85 to 95% regularly. And it's only the cryptos that get back up that we end up remembering and thinking of. But there's a lot of coins that don't ever get back up. They stay down 95% forever.
And that's like 99% of the coins, right? It's like it's
a huge amount. It's a huge amount. So Hex is special because you can time lock for up to 15 years, and it creates a system of incentives and game mechanics that really incentivize people to stick around, to build community, to like take care of themselves, so that they'll be able to enjoy the rewards that they've put out for themselves in the future. So that whole concept of delaying gratification and of having game mechanics that work super well, that are new, that have never existed before, like in Bitcoin, it's super against the odds. And the delaying gratification part, that fits with self-improvement, which is an area that I worked in for many years. And so, yeah, so Hex has, I almost believe that it's a form of changing your own behavior when it comes to saving for the future, because a lot of people, whether they're going to sell when their crypto goes down 80 or 90%, or whether they're going to sell when it goes up, when it doubles, or when it 10x's. What I've seen, just maybe in some cherry picked cases, but probably for everybody, is that you don't get a whole lot of new multimillionaires and billionaires in crypto, because the people who aren't already rich, they end up selling on a 10x, and then somebody comes along and buys it from them. And then the crypto, in some cases, goes up another 10,000x or another millionx after that, in the case of Bitcoin. So Hex is really special because it was designed to be a superior store of value. When we look at the different functions of money that are described by economists, you have it's a medium of exchange. You can trade things for it. It's a unit of account. That means like you keep track of things like the cost of something versus something else in dollars. And then store of value is the one that a lot of cryptocurrencies wanted to move to. But Hex is the first crypto to have a provable store of value. And so when you time lock something and you can't get out of it, and you're the one who's holding the T-share, the share of the future compound interest in the system, that helps to hold up the price. And it helps to protect you from yourself. And when many people are doing that, all within a system that's rewarding them, that becomes a really, I think, powerful store of value, as we saw with Hex dipping on day 33 all the way to 0.00005.
Oh my gosh.
Per Hex, like in dollar terms. And then on day 656, you have 50 to 55 cent Hex, and that's a 10,000x in about 1.8 years. The only other crypto that's ever done that fast, I believe, is SHIB. And no other, like Bitcoin did a 7 million X in 10 or 11 years. Ethereum did a 10,000x from 15 cents to 1,500 in about 2.5 years. And so there's only like 4 cryptocurrencies, I think, that have ever performed as well as Hex.
Yeah. And it's unbelievable. It works out in every way. It works out in the sense that the price goes up because people don't sell, and it works out in the way that you get to prosper from those thousands of X's. Like I see like a lot of people talking about, let's say PulseChain and PulseX, like, yeah, it's gonna do a 10,000x. Like they're gonna kind of get it. Like they're gonna sell at least at the 10,000x. They'll take profits, or the 7,000x, or whatever it is. But I don't think they understand what a 10,000x is, and like how like the euphoria and the misery that you experience on the way. I experienced a 60x, like a couple $1,000s going to close to $100,000, and basically the feeling that I had to sell or to buy, it's I don't know. Elaborate on those feelings, because you've been through a 10,000x, and I've been through a 50x, and people just think it's a given that, yeah, I'm going to get in at at this point, and I'm going to get out with millions of dollars and just kumbaya. So I guess I'd want you to speak about that.
Well, I made a spreadsheet, and I decided, like, I pre-planned my dollar cost averaging out of Hex, and I was like, I'll sell 1 million at 0.00 and I'll sell another 1 million at 0.0, and it's like, by the time I got up to what I thought was even possible, it was still way lower than even we're at now with the dip. Okay.
Yeah.
So like, the fact that I figured out after about 6 months that time locking longer than the average and having a ladder coming all the way back down, that would be right for me. And I've always kind of approached crypto as like more of a long-term thing. It was my first experience with crypto is like going down a lot and like sticking with it and using like, YouTubers as support, people who could still hold the faith when things are down 70%. But holding through the rips is, for me, it was a big deal to like have a plan, even if I adjusted it later on and decided to hold on to more hex longer. But eventually I got to the point where it was like, I know I needed a time lock, and I had the moment of clarity at one point where I just told myself like, all right, maybe I'm going to live 50 to 100 more years. And so I'm only going to take out like 1 to 2% of my hex a year, because that's how much, then it'll last the rest of my life. And that's a thing that it's a personal choice and it's not right for everybody and all that good kind of stuff. But that's the choice I made. And so, every year on my birthday, like I get a certain amount of hex and the rest of it's time locked.
Yeah, that's the way to go. That's the only way to go. Yeah. So I guess my next question is basically something that I've noticed. This relates to Bitcoin as well, and a lot of people aren't talking about it. Is that you look at the Bitcoin dominance chart for last cycle during the bear market, when the bear market came in 2018, it had a huge bounce. It went back up to 80%. This cycle, the Bitcoin dominance did not regain its footing like that. I think it's trading sideways. I don't know exactly what it's at, but that's very interesting. So it continues losing ground, and now there is competition on the market with hex, right? That it is the same store of value target market, but only hex is pretty much superior by every metric. Bitcoin has the miners dumping on you. Hex has obviously the stakers getting that inflation that, the miners getting Bitcoin, and hex the stakers get that inflation, provided they lock up and don't sell. And obviously they get rich, the price appreciates and things like that. So I mean, do you think that hex is going to flip Bitcoin? And moreover, is there a future for Bitcoin? That's a bigger question.
I don't know. I could say some interesting things.
Please.
But I can't answer that question. So I mean, like, nobody thought Bitcoin was going to work ever since it was created. And so there's always been FUD around Bitcoin, and like, it's always surprised people that it worked and that it became such a huge store of value and that Bitcoin did a 7 million X. None of that was predicted. So will Bitcoin continue to be around? Will it continue to make new all-time highs? Like, that's possible. Will something better come along and get mass adoption? That's possible. Will it be hex? Like, that's possible. So yeah, I mean, it's like, I guess I stopped paying attention to the Bitcoin dominance chart whenever I realized they were like changing how it's defined. I can't remember exactly.
It's like the CPI,
Yeah. Can't remember exactly what they changed about it, but it was like, I don't know, something like, are they including stable coins? Yes or no? Or like, it was something like that. So, anyway, yeah, like, I think there's like two different camps, and it comes down to like what people decide and what, which one gets more popular. I know that not a lot of people thought that SHIB would do an 18,000x in like less than 2 years. And that's just like, that's kind of how it goes, is certain things can catch you by surprise, whether they have utility or not. And I think that that's a good lesson to remember, that just because something is designed better what do people say, like Betamax versus something else, like versus VHS tapes or something? That's a good example of like one technology was way better, but it didn't get adopted. And like the world moved on like with a different winner than the thing that was the best. So it's still undecided. And that's pretty exciting for people who are not just relying on crypto for them getting rich quickly, which is like, that's usually a bad plan. But those of us who are like actually in it for the tech, and we know that people make fun of us for that, and we don't care because we're in it for the tech.
Yeah. Well, yeah, I mean, especially when you get wealthy, I mean, at that point it's like you're not in it to get rich anymore. You are already rich. It's like, okay, so now you're more into the community, the shared values, things like that. Let me just say for the record, I'm not, into predictions of the future and things like that, but I cannot make up a scenario in my head where Bitcoin survives after a given period of time, after like a couple of years. I just, its returns are diminishing. Its game theory is inferior. There's no founder. I mean, the spokesman just keeps rotating. I mean, it was Roger Ver, now it's Saylor. I mean, Richard Hart was actually a big spokesman for it. I mean, but and like there's no like clear leader. I think that was an issue with Satoshi Nakamoto. Also, like once Hex really gets on these on ramps, and it's just a seamless method of adoption. Like you're the consumer, you have these two options. Why would you pick Bitcoin? Less returns, no yield. You're gonna sell early or late. I mean, what do you think?
I think like again, that's what we would think rationally, that as the leaders of something that's decentralized, is they get less and less technical to the point where like they're saying things that are wrong in the case of Saylor. And the Bitcoin conference that I went to in Miami had more people than ever, even though the market was down. So it's like, SHIB can inflate, some crazy amount, and it can not have any technicals, and it can still do really well. So it's really anybody's game. Whoever can figure out how to get more adoption and how to navigate the technological space.
Yeah, I guess that is true. That is true. I mean, the meme aspect of crypto really makes it's like a game changer, because like when it came to like stocks and stuff, there were fundamentals. There were things that people went by for like what's a good investment, what's not. You could have a complete pile of garbage like Doge and SHIB, and it's just people just ape into it because meme. Yeah.
Well, it's deeper than that. So I don't know that I've heard anybody else say this, but a hot take that I have is just that the Occupy Wall Street movement became the GameStop movement, became the SHIB movement, and the meme coin thing. And so there actually is real pain and like importance behind people who are memeing. They're buying meme investments because they believe that the financial system is rigged, and that's their way of giving the middle finger to the system. Whether crypto is rigged or not, whether GameStop is rigged or not, like they wanted to make a political statement. I think that's why meme investments did well for a time.
Yeah, that's very interesting. I never heard that take, and that is a very good take. But yeah, no, it just came out of left field. It's like it would manifest itself and see like TradFi and then crypto, and crazy. I guess, but the problem is with the meme stocks is once or the cryptos is that once it really goes down 90%. I mean, one of the biggest metrics of what makes a good crypto is the community. And is the community going to stick around? I mean, that's a question for you. And how does that compare to the Hex community?
It's hard to know. I think the Hex community is crushing it, and I don't keep up with all the other communities, but maybe I can say more at the end.
Okay. Well, I take the Hex community. Hopefully we could onboard the SHIB community. Like, wouldn't you rather own something that pays you? Right.
I mean, there's, yeah, I think there are already some ideas that people are putting into action to try to onboard more meme communities. So that's cool.
Would you want to speak about it, or?
I think like to the core Hex community, it's not important. It could be a distraction, but
okay.
Yeah, there's hope for the Dodgers.
Okay. I'm looking forward to seeing how that unfolds.
Yeah.
Okay, so now my question is that for a period of time there was that Hex decorrelation, right? So you had Bitcoin went down from 64,000, it went down to like 28, and Hex was making all-time highs. That's when I was onboarded. I think that was a great onboard. The fact that people saw, hey, look, something's decorrelated. You know, we know the Fed interest rates are coming up. The hikes are coming. Let's get into something that's decorrelated. You know, it has a proven track record of making all-time highs when Bitcoin was down over 50%, which is something that you see rarely in crypto, if ever. So I think the thing is, though, is that during that time there was the free money going around. There was the risk on Federal Reserve. Now the Fed is risk off, and Hex has obviously had this correction, 90% correction. But the things that Hex had that made it go up at that time were, the game theory. You have the community, things like that. I mean, those things remain through this period of loose monetary policy. You also have the PulseChain launch coming up, which is obviously, I think, going to create a lot of demand for Hex because people want their copy. So I guess, can you see a scenario where Hex decorrelates in this hawkish Fed environment?
You might be able to answer that if somebody did the chain analysis and looked at the chart of future market supply and looked at the whales and the sharks that own the majority of the coins that are going to be coming out and what their past behaviors have been. I think you could get a better idea of what's going to happen in the future with Hex, because there is a chart of future market supply, unlike pretty much most other investments in the world. Hex is the first with a chart of future market supply because of the time locking feature. And so people who go to the website hexfire.io can see some of those statistics of what's going on in Hex on chain. And that stands for, the FIRE part stands for financial independence, retire early. So that's kind of cool that Hex has more statistics about what the future supply will be, because price is determined by supply and demand. Yeah. I have a theory about why Hex was going up when you got in. That must have been because the 1 year anniversary of Bitcoin peaking was just a little bit over a year ago, maybe by a couple weeks. And then in a couple weeks from now is the anniversary of when Hex peaked, I think. And so the reason why Hex could have kept doing so well there, other than reflexivity, which is like, if the price goes up, then people want to buy it more. And so then the price keeps going up until the bubble crashes. But everybody, I think, not everybody, I think a lot of people in the Hex community had attached onto this idea that Hex could do the same thing that Ethereum did. It wasn't a promise that anybody made to anybody else, but it was really well known that that's what Hex was designed to do. Hex was designed to do a 10,000x in 2.5 years. And that's part of the reason why Hex was so controversial actually until now, and probably beyond now. Like, a lot of people don't like Hex because people were saying that it could do a 10,000x in 2.5 years, like Ethereum did. That was, people automatically like treated it like a scam just because people were saying this is that it could be this successful as something else that had come before it. And like that was too much for people. And so, but there were people who believed in that. And so if you look at when people time locked, a lot of people set their Hex time lock to come out right around like 2 years, because they wanted to front run the 2.5 year call. And so what ended up happening is, when you like look back, nobody was thinking like that it would happen in 1.8 years. And so there was a lot less Hex that was coming out of time locks at the 1.8 year mark. And so that in that month between when, or whatever it was, the number of weeks between when Bitcoin peaked and when Hex peaked, you had a much smaller supply of Hex available at that time. And that's what Hex is designed to do. And so it just shows you like how crazy Richard Hart's like timing luck was in terms of like when he launched Hex and all that good kind of stuff. But it's really interesting to me that it kind of makes sense in my own mind that if Hex was going to do a 10,000x, that it would have done that, like maybe before, maybe 1.8 years in. And I think that people had even set limit orders to sell a bunch of Hex at 10,000x, because Hex just like bounced right off of the 10,000x mark and didn't stay there for very long at all, for like maybe a few minutes or something. So,
oh wow. So yeah, that's interesting. So you're saying that the people set limit orders based on Richard's price target. Maybe Richard should have said 20,000x or 30,000x. That would have happened.
And if you had time locked Hex from day 3 to day, and I did not do this, by the way, but I do a lot of calculations from day 3, because I know that people could get in at that time, because I put in like $100 at that time or something. And also because there actually wasn't a price for a T-share until like day 3 or something. If you go back in some of the stats that people publish. So, but if you had done a time lock from day 3 to day 656, you would have, from the interest that you were paid and from the big payday and from early end stake penalties and everything, you would have actually been sitting at about an 18,000x.
Oh my gosh, that's insane.
Yeah.
Yeah. And you said I wanted to ask about one thing. You said Richard's luck.
Oh, I'm sorry. Can I just correct what I just said?
Oh, yeah.
That was wrong. It would have been day 33 to day 655 is what you would have had a time lock to get the 18,000x. From day 3, it was much less than that, because on day 3, you were still going to go down another probably 60 or 50% to the all-time low. So sorry about that. I was thinking wrong.
Yeah. And you mentioned also that people were turned off by the price call, like saying this amount of X's. I think a big reason for that was because, like, in Bitcoin, they kind of make it like talking about price performance is like unprofessional. Like we're here, we're trying to, fight the banks. And I'm not trying to bash that or anything, like their criticism, Federal Reserve and, monetary policy, but like they always want to disaggregate price performance. They don't want, and that happens with Ethereum also. There isn't a lot of talk about, look how many X's we did. I don't know. Would you want to speak about that? Like the importance maybe of talking about price performance and just in general talking about price performance as a crypto community?
Well, I mean, it's really important. Like when we like respect the laws of the land, it's really important to remember that that there's a difference between free speech and like regulations. And so in the United States, like you're not allowed to like guarantee that a price is going to go up. And talking about price is, it's something that a lot of people stay away from. And it's something that scammers talk about like how you can get rich quick. And so that's why it's so ironic that in crypto, you actually can get rich quick by being in something that's not a pump and dump, by just being in something that's a normal investment like Bitcoin or Ethereum or SHIB or Hex. But it's very difficult for, I think, for anybody in the world to like adjust to this change. It's only been 12 years since crypto was invented, and it only started making Bitcoin millionaires really prominent, I would say maybe 6 years ago or something. So it's like we haven't even gone through 2 political cycles where crypto has really been a thing. And so it makes sense that regulators would still be trying to figure it all out. And let alone, other people in this, other leadership in the space. Like if you decided as a community in Bitcoin or Ethereum, if you decided like, we're not going to talk about price because we're tired of being called scammers, then you're also kind of like lying to people. Like if you don't tell people that the price can go up a lot and it can go down a lot, and you shouldn't put in what you can't afford to lose and all that good kind of stuff. If you're not, if you're not following the rules, then that's stupid. Also, I mean, you are allowed to talk about hypotheticals. You are allowed to say, here's the best case scenario. And if you leave that out, then you're not giving a full education to people at all, I don't think. So
yeah, I'd agree. And I think, in stocks, like everyone talks about price performance, but crypto, there's maybe a little bit of a stigma because it's supposed to be libertarian. It's supposed to be, disruptive, to the system. We're kind of in it for something, more than just making money kind of thing. And there's kind of just this thing like, oh, we can't talk about price performance. But at the end of the day, like for someone new to the space that hasn't gotten, the appreciation that someone like Roger Ver got, who kind of stays away from price performance. That's really what matters, right?
part of what's happening right now in crypto is like the word crypto is getting changed in a lot of people's minds to mean leveraged trading and pump and dumps and loans, taking loans against your crypto. And that's all terrible for people. 100x leverage that's, in my opinion, kind of like a criminal act of
and it's on crypto. Crypto's already 10x leverage the stock market, and then they're 100xing that leverage. Normal stock traders are only doing like 2-3x leverage. It's
taking any leverage, doing any loans to buy, to like short or long crypto is just like, that's gambling. And when you get 100x, that's mathematically going to fail.
Yeah.
And so if everybody agrees that that's what crypto is, if like crypto becomes that, then we do need regulators to like save the day. Which is really weird but that's who's getting all the money, is the people who are offering 100x leverage or who are doing rigged deals to launch coins and stuff. And so these are the exchanges that are trying to write the political policy and stuff. But then, you've got things that are, so it's kind of interesting that those are acting like they're doing right. And then people look at the marketing that Hex had early on, and they like see that there's this little bit of overlap with like how scams are advertised. And but the reality is that was very much, I think, part of part of understanding how to advertise something that's new that actually can have a really good case scenario for people, and that's and so that's what ended up happening. It seems is that just like in normal crypto, people who bought the top, like I did in Bitcoin, early on, then you go down by a huge percent, and then there's always the possibility that the crypto goes back up a lot.
Yeah,
but you never know.
Yeah, 100%. And you speak about leverage and like trading, and like Hex is really the antithesis of that, of that, sort of, market in crypto, with exchanges. And I think that's the biggest
Hex
reason.
can be
Yeah,
used in a way
if it's used correctly. Correctly. No, so that's why it's being, in my opinion, gate kept so much. Does that? What do you think about that? I mean, it's not really my opinion. I think. Why do you think Hex is so gate kept? Is it only? I guess.
Yeah, this is part of the reason why I became a Hex YouTuber, is because I saw that CoinMarketCap was not listing Hex correctly. And I had been early in a couple other coins that were trying to get listed around the same time. And so I did some really deep dives into what counts, what are the listing criteria. And so looking back, I've always had mixed opinions about Hex being gatekept, because the criteria that they use to detect scam coins that have fake market caps, that try to game the system and get up to be listed in the top 10, even though nobody owns them and it doesn't have any volume and it's obviously a scam. And we've seen tons of these come and go that I don't even pay attention to anymore. But so one way that they came up with to detect the difference between a crypto that would stick around longer and a crypto that wouldn't was, is it listed on these centralized exchanges that have, regulators stuck up their butt? So that would be a predictor of whether there would be a rug pull or not, or whether something was legitimate or not. Hex didn't try to get listed on centralized exchanges, because at the same time Hex was being launched, there was a new technology that's in the top 3 or 4 most important technologies in crypto history that was released, called Uniswap, which is a decentralized exchange. And so for the first time ever, you could have a liquidity pool created without a centralized entity gatekeeping you. And so I mean, Hex was invented and launched at the same time that this revolutionary technology was invented to do decentralized exchange, and that to do DeFi. And so Hex is the best example of DeFi being successful. And DeFi takes business away from centralized finance, which includes centralized crypto exchanges. No matter what the narrative that they're telling you is, Bitcoin is, it's much more centralized than Hex is, if you say that part of centralization is a centralized exchange holding your keys.
Yeah, no, that's a great point. I'd agree with that fully. So moving on, PulseChain and PulseX. I think a lot of people are talking about that these days. We had a rare update from the man himself, Richard Hart, regarding PulseChain, and he said, I quote, so he said, teams A and B are competing to release first. I'm not sure what that means. If you could maybe elaborate on that in a second. But he said development is going fine. PulseX has been fine for a long time. So what does this mean to you as far as the launch date, the launch time frame and things like that? Just, you could talk about it.
Yeah, I mean, I'm going to talk about it in a minute, that I'm building my own thing in crypto that that'll hopefully plug in well to the things that Richard has made. And so I'm learning for myself firsthand that that there can be no time estimates in software because of unknown unknowns, and especially because I am not the one writing the code. And so it's not up to me when it's done. And I've specifically got agreements in place that say that I will not hound the dev. I will not expect things on any kind of timeline. And that's been working really well. We've made tons of progress without having pressure on us. And so I could understand why Richard would, not be not telling people when PulseChain will launch, because it seems like PulseChain isn't ready yet.
Yeah, no, I agree. Yeah, it's not ready, but it is interesting that he gave an update even, which maybe could be a little indicative that it's getting closer, I guess, but even so.
Well, here's another way to look at PulseChain and PulseX. There's a difference between wanting something and knowing that something's going to happen. So like we sacrificed for freedom of speech and freedom of movement, and it is possible that somebody could come along and airdrop tokens, because that's something that happens in crypto. And Richard seems like he's said publicly that he wants to make a copy of Ethereum because he's got all these really, 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 really cool ideas about how to improve it and how to plug in pieces of other things that have been created in the open and decentralized world of cryptocurrency. And so there is a separation there between like the fact that Richard has said, the people who sacrifice for freedom of speech and freedom of movement, those might be the same people who that might be this set of people that he chooses to airdrop his thing to. We've already seen people have gotten airdrops from being a part of the PulseChain and PulseX sacrifice set. You had Weight token that was worth like $40 to $80 somewhere in there per wallet. You had a Poor Pleb token just came out with about a $12 airdrop to people. But yeah, I mean, if PulseChain and PulseX tokens get airdropped to the people who sacrifice for freedom of speech and freedom of movement, that'd be a really cool thing. And but it's it's a matter of operating within the law.
Yeah,
the law clearly states what an investment is versus an airdrop, what is a sacrifice versus anything else. And so it reminds me a little bit of Hex being operating within the law. Hex launched as a finished product, and everything else was launching as a project that had promises.
Yeah,
a promise coin. Well, Hex operated within the law and was very strange for doing so. Richard could have started collecting money ahead of time for Hex and been, and then could have, and that would be an example of a promise coin. Now, when you sacrifice, you don't have a promise there. There is no promise involved. And I started to see some FUD in the community about regulation that like comes and goes pretty often. But it's important to remember that like it was very clear there was no way to find the sacrifice. Well, not no way, but like I don't know of people finding the sacrifice address without understanding that it's a sacrifice address. And so when people have to wait and they're impatient and they have like the best case scenario in mind, they get restless and they get angry and they start like saying like, you promised us PulseChain tokens, blah, blah, blah. And like, just because somebody says that doesn't mean that it's true. Just because somebody says that doesn't mean that they didn't understand it in the first place. It actually just means that you've, you've got a minority of people in your echo chamber that really, they understood, and now they're just mad.
Yeah,
which is normal.
Yeah, it's immaturity, and this was my take in one of my previous videos. Is I don't understand why people are bugging, because there are two scenarios, right? Either you got in on Hex in the beginning, and you're an OG and you're rich, right? You made a lot of money, go off, take a vacation, buy a Lambo, buy a mansion, have some fun. But if you came in, closer to the top and you're not up a lot, now is the opportunity to load up on Hex down 90%, and you get the copy on the PulseChain. Once PulseChain launches, you're going to have to pick a chain. And that is not that's not the case now. Right now, you're buying at a 90% discount. I'm getting many multiples of what I had when I bought originally, getting many more T shares. And I'm getting it on both. I'm getting it on both chains. It's such an opportunity. In fact, I wouldn't mind waiting another year or so. Like, what's the problem? You know what I'm saying? Either way you look at it.
Yeah, it's really cool. And if you bought Hex before September 15th, you got a copy on Ethereum Proof of Work and Ethereum Fair. That's pretty cool. That's something that already happened. That gives us a little preview into what could come. Yeah, very cool.
Yeah, it's such a win-win. You're an OG, you're rich. You're not an OG, now you could really cover some ground. You could really close the gap between yourself coming in new and the people that got in early. It's a great opportunity either way you look at it. So now the question that everyone wants to ask, had to ask it having you on the show, is do you believe PulseChain and or PulseX will do a 10,000x in 2 years?
That's up to the people who hold it and the people who buy it.
Yeah.
And nobody knows. But was there another part to that question?
Yes, there was.
Good.
Okay, so I guess there's no way of knowing is really the answer, right? It's just dependent on market conditions and buyers and sellers and things like that. Do you have a preference with regards to Pulse and PulseX? Which one do you think will outperform over, let's say, the short term as well as the long term? That kind of thing. So,
again, it's like it comes down to what people are going to be more attracted to, and it's because I don't believe that crypto all comes down to utility. I think it's a combination of people recognizing utility, and then it all comes back to supply and demand, and people are sometimes demanding things that are not just the most scarce or don't have the most deflation or whatever it is. So that'll be curious to see.
Yeah, the metrics really measuring a crypto are very complicated because there's the meme aspect, there's the Elon Musk aspect, is he going to tweet about it kind of things. So I guess just to ask on that, it's like, what kind of metrics there's the community also, things like that, game theory. So what are the metrics that you really look at when it comes to price performance of a crypto over a given period of time?
I mean, the more I learn and the more I know, the more it's just like, it's in some ways, I think, unpredictable, which is why I don't assume that anything is going to do a 10,000x.
Yeah.
Even though I know that something probably will. So I'm not kind of like you know, I don't have I don't have an ultimate degree of certainty. And I think that at the end of the day, it comes down to like what we do as individuals. Like, I strongly believe that an individual can make a difference. And so if more YouTubers come along that raise awareness, if more people figure out clever ways to onboard people, figure out clever ways to build onto the ecosystem as a massive net positive for the space, then that's probably what matters, is making a small number of individuals making breakthroughs.
Yeah. Okay, fair enough. Okay, and so, well, I would just say that I hope I'm really wrong, because I missed Pulse Sacrifice. I came too late, but I do think Pulse is going to outperform PulseX, at least in the short term, because 30,000 people got in on the Pulse Sacrifice, and then you had 130,000 got in on PulseX. I'm sure all those people that got in on PulseX want to buy Pulse. I mean, what do you think about that?
I think that people are going to chase whatever ratios are
That's
changing.
True.
I think that PulseX may be designed to have a more aggressive burn, which may make it more scarce, which may make people like it and hold on to it. It's up to the holders.
It's true.
And the buyers what they want to do. And one thing that Crispy Man said on Game Theory Gang, my show every Tuesday night for 101 weeks, Crispy Man's been on like the last 4 or 5 episodes, and he has said publicly that he thinks that he likes ratio trading a little bit of PulseX and PulseChain for Hex if the ratio is right.
Interesting.
And so that's one thing I don't hear a lot of people saying, but some people will make that play.
Yeah, no, that is interesting. And I'm personally not a fan of the ratio trading, because like trading is tough. And then this is like the complete unknown, like how things are going to play out in a system state copy. I mean, they have ETH proof of work and things like, but it's not the same as, the PulseChain copy, where there's a lot more participation. So right. I'm just a fan of the dollar cost averaging into what you want to buy, but
Smart.
yeah, stay away, in my opinion, not financial advice. And okay, so then as far as game theory, you hosted Game Theory Gang. You continue to host that. Excellent shows with David Feeder was on it. K4K was on it. Really, really enjoyed. So do you prefer inflation to protect the price or deflation to protect the price? So it's Hex and against PulseChain and PulseX.
This is the most interesting question that you've asked.
Oh, thank you.
And I love this question. So the question is asking like when it comes to incentivizing people's behavior of holding onto something, is it better the way Hex does it, where it inflates to reward holders who have time locked, who have provably time locked, versus PulseChain and PulseX, which are deflationary in the sense that every transaction that is performed on either of those two pieces of software, those kind of like, platforms, then a percentage of the fee of what you're doing to do any transaction on PulseChain or with PulseX to do swaps, a percentage of that transaction fee is burned, making the total supply of PulseChain and PulseX immediately deflationary upon launch, which means there will never be as many tokens as there are today. Well, as there are at launch, and then every day after that, there will always be less and less. Those are two different models of digital scarcity. And, that's way different than Bitcoin and Ethereum. Bitcoin is disinflationary, right? It's the inflation decreases over time, but it's still inflationary.
Yeah.
Ethereum may have just hit in the past couple of days. Maybe they're getting close to being deflationary. But that took a lot of time for them to figure out. So my hot take on this question is that we don't know. And I think that's really, really cool that we don't know, because we might find out.
Okay.
I think personally, I think it could be the case that if you had a combination of like time locking and not overpaying people to time lock, that actually you could have more economic energy transferred into price appreciation. So what that would look like is like, what if you had like what would have happened if Hex had lower APY? Like right now, Hex has like 36% APY per year if you time lock for the average of 6.5 years, and you get paid in Hex terms. And like, but if you lock for a year, you're getting like 10 to 12% APY. Yeah. Like, but you have to multiply that by the USD price appreciation.
Yeah.
Which is up like still from, from day 3 or day 33, you're still up like 100x, 500x, 1000x with staking, with your stakes that are coming out now. And so the fact that like people who got in early, like they're going to keep selling. Well, they don't have to, and that's interesting, but the new coins that are coming onto the market are like coming on pretty hard compared to how many coins are available to sell right now. And so that's kind of an unknown in the system, is like, would you still be attracting as many people if you couldn't say that the APY was that high? And on the other side of that, are you overpaying people to hold up the price because of the price appreciation being in there as well? Maybe you could have paid people 5 or 10% APY for like a 6.5 year stake, and then the amount that you'd be getting for a 1 year stake would look really small, right? It would be like whatever it would be, 0.5%, 1% or something. But then you're multiplying the principal and the yield by the price appreciation, and then people are still getting paid super well to time lock.
Yeah.
Which in a PulseChain and PulseX, we don't know that there's going to be time locking built in to the base layer, and so that's
well, we know there's going to be time locking built in.
That's why I'm building something.
Yeah, that's what I was saying. I was the wink. But yeah, we're going to talk about that. I just wanted to say it's interesting what you're saying. So on the one hand, if it would be a lower APY, it would be less sell pressure coming onto the market, by the unlocks. But at the same time, maybe people wouldn't be as eager to lock it up, right?
Yes.
Because this is actually one of the things that I talked about in my videos, if I could share with you. So basically, kind of Richard said it, but I phrased it within terms of diminishing returns. And this is what's interesting. So there is the issue that people have with Hex that basically, the inflation, it's delayed, but eventually it's going to hit the market. And, there's always going to be this like heavy inflation that just drives the price down, drives the price down. But what they're not realizing is that they are basically saying that because they're thinking like people that want to just dump on the market. But really the way it works is,
yes,
the law of diminishing returns basically says that the more you have of something, the less it's worth to you. Meaning if you have one house and then you buy a second one, the second one is not going to be worth as much as the first one because, you don't need it as much. And then you get a third house, if let's say, there's a disaster and there's a flood and the house gets destroyed, you already got two other houses. It's worth less and less. So in the beginning, right, the stakes start unlocking, let's say a guy like me who doesn't have a lot of money and, still needs to work and things like that. So the stakes start unlocking and I dump. but I have a lot of money. Let's say I got 1,000x, 5,000x. The next one, so I go out there, I buy my Lamborghini, I buy my watches, I buy my watch collection, I buy my my mansions, things like that. By the time the next state comes up, I don't need to buy as much, right? I already have, let's say I already have the house, so then I buy maybe another house. Eventually there comes the point where you really have everything, and you got a trust fund, you got some real estate, you got dividend paying stocks, other means of income, where there's really no point of selling it anymore. It's like there's just less and less of an incentive to sell, and it's one of your fastest appreciating assets, and it's paying you yield, and you share values with the community. You are just going to become less and less prone to selling as the price appreciates higher, and you've already accumulated other means of income and other and all like the material things that you need. So as your returns diminish, in the sense that like you don't need as much material wealth, you're just more likely to borrow against or just throw it down another 15 years. Does that make sense? Like basically, like the richest people, they don't sell their stocks, because why would they sell it? To buy a plane, they already have a plane. To buy a car, they already. Does that make sense what I'm saying? It's like
it does. And I will be curious to see if that's how it is. I guess maybe if things go super well in Hex, maybe you and I will both find out what it's like
yeah,
to have so many planes that we can't buy anymore.
exactly.
And I think that that kind of speaks to a macro belief that I have, bigger than just like the macro of like what is the Fed doing, but the macro of like what is humanity doing with productivity and with hard versus soft monetary policy. And I kind of believe a little bit of the Austrian economic school of stuff that would say, if you run out of stuff to buy and you hold on to your money, that actually motivates people in society to invent cooler things, so that the money doesn't get stuck all with a group of people and then never get used. And so if you're not scaring people into investing through inflation, and technology is making everything cheaper over time, which is deflationary, then people aren't misallocating capital to build things that are cheap and stupid that nobody needs, because they're not being pressured to invest. Otherwise, they lose half of their purchasing power every 10 or 15 years from inflation. So that's definitely an unpopular opinion or belief that I would say is like, a lot of people believe that if the monetary expansion doesn't keep happening, then everything falls apart. And it's cool that crypto and fiat could end up teaming up together and causing like the best of both worlds, where crypto continues to appreciate in value and fiat continues to decrease. And then as people switch to more of a Hex or something like Hex, like store of value over time, that's provable and transparent and decentralized and open and all these things, that you could see more innovation happening that causes the price of things to go down and causes the value of crypto to keep going up.
Yeah, well, that's interesting. And well, you do see as Hex appreciates, there's innovation in, let's say, people have a lot of money now, they want to spend it on longevity, right? And that's something that you're very involved in. And obviously, Richard, you spoke at the SENS conference, which was a great speech, of course. Thank you. Also, and Richard he raised 26 million for that as well. So that's
27 and a half.
27 and a half. So that's interesting.
Yeah. And like, so another interesting thing is like the thing that I'm building is probably going to kick a huge amount of ass and like become a super successful part of DeFi. And I'm not spending any money on it.
How are you not spending any money on it?
Because I put all of my effort and energy for the past 2 years into like building social capital to the point where it just worked out in the universe that I became super good friends with a guy who's a genius developer.
Oh, wow.
And so because from the beginning I like talked about my values and didn't sell out and like didn't sell out my audience and like had the Hex ethos, like, you know, running through all my content, I just attracted a community and a team of people that is capable of doing really amazing things. And we all came up together in Hex or had certain life circumstances where we don't need to raise money from investors. We don't need to do a sacrifice. We don't need to create a token. And, you know, we're building something really cool. So Time Pays Me is the name of my project. It got renamed. And the idea is that you'll be able to time lock your PulseChain and PulseX tokens, maybe somewhere in between like a week and 10 years. And then during that time lock, your coins are dripping out to you based on the amount of time that you've served, except for this 10% temptation that gets put in the smart contract on the side. And that's a temptation. I call it the early payday. So at any time you can take out, it's kind of like a 10% loan from your future self. And so of the coins you time locked, you can take out 10% at any time. And then your drip that is coming out every week, like that gets cut in half to pay back the 10% loan that you took from yourself. And anybody who takes their early payday has to pay 10% of the 10% as a penalty. And that's 1% of your principal. And so where does that money go? Well, 10% of the 10% of the 10% goes to me and my team. So that's 0.1% of your principal. And then
well deserved.
Yeah. Well, thank you. And because people can use it for free if they never take their 10% early payday and they leave it in until the end, then you can use the system without ever paying a fee to us. The other 90% of the fees goes to the people who kept their 10% in. And even if you take your 10% out, then it regenerates after another 20% of your time is served because of the drip. And then you can start earning your trustless yield again.
Wait, I'm not sure I understand the drip. Is it like time lock as in you commit to drip is as in the ladder? Like,
yeah. So let's take the example of like, let's say you time locked some of your Pulse tokens for a year.
Yeah.
So after you serve a week is about 2% of a year. So you could withdraw 2% of the tokens you locked every week.
So the drip is that you have the ability to. Okay. Yeah. Interesting.
So it's kind of like Hedron is like the amount of time you served is the amount of time you can withdraw, or the amount of coins the percent that you can withdraw. And so the drip is like having a continuous ladder, and so your past self is paying your future self like every week.
Interesting. So I'm sorry.
Go ahead.
No, finish it.
So I mean, so that's the drip and that's the early payday. And then, I mean, people might be thinking to themselves like, well, who cares about a little 0.9% fee that people are paying here and there, in terms of like, why would that incentivize people to use the system? And because originally I didn't have an incentive structure. And it was just that people should know that time locking is good for you if that's what you're trying to do. And so, and because the majority of the price appreciation in Hex I would argue has come from time locking and not from the interest payments or the yield, you could say. And so in time pays me, you're getting this what seems like a really small bonus. But what's interesting is when we compare that to the emergency end stake penalties in Hex, which is a small fee that relative to the entire system, it's a relatively small fee that people are collecting from the impatience of others. And that's what time pays me does, is you get a bonus from the impatience of others, and you get the rewards of your own patience, hopefully helping you out in the long term. Well, even if we looked at Hex and the emergency end stake penalty yield that came from that at the all-time high on day 656 compared to day 3, which is not cooked numbers. That's like really, like, I could 10x what I'm about to tell you, but I'm not going to. Is like from day 3 to day 656, the amount of emergency end stake penalties that you would have received was about 2.5%. And that would have given you like a 19x against your principal.
Wow. Oh my gosh. Yeah, because the price appreciation times. Yeah.
Yes.
Yeah.
So that's where the part of the genius of time pays me comes in, is that in reality, after 15 or 30 years, if you don't participate in time pays me, it's mathematically, theoretically possible that you could dilute yourself by like 50% compared to everybody else.
Oh, wow. That is very, compound interest.
Yeah, exactly. Compound interest and price appreciation. And so it's a really cool system that has these balances where somebody could use time pays me to teach themselves how to be more patient, because at first they're taking out their 10% early payday and trading with it, and then it regenerates because of the time served, and then for some people, they might get lucky timing the market, and they might end up taking the early payday 4 times during their entire during the 100% of whatever their time lock is. And so for the people who time lock for the maximum, whatever that'll be, or close or more than the average, those people, you only get your interest at the end. Sorry, not interest. You only get your bonus yield at the end. And so, it is theoretically possible that somebody could serve like 80 or 90% of their time, and they could have sold 80 or 90% of their drip. But the amount of money that they still have in the system could be like 100% of their principal, because people could have cycled in and out. And if I'm locked for 10 years and somebody else is locked for 2 years, and they do an early payday 4 times every 2 years, all of a sudden they've done it many, many times during that period. And it's not even more, like the maximum number of times you can do it, you're only going to pay like 4 or 5% of your principal, which is like, that's like what Coinbase's spread is plus their fees. So it's like, it feels really fair. Also, because if everybody's time locking and keeping their 10% in and incentivized to use the system, and they're only dripping out, a week into 10 years is going to be it's not even going to be 1% of your coins. All those people holding up the price, like, you would almost pay them 1% of your principal to just hold up the price for you. And so there's like a really good, I think, mechanic of game theory here, that like you win if you take your 10% out early, and you win if you leave your 10% in. So everybody's winning when you compare the relative price appreciation versus like creating scarcity in the here and now. So I'm I'm like, yeah, so I'm really excited about that. And then if that wasn't already like a big enough contribution to the space, the other thing that Time Pays Me is going to do is under some circumstances, it will allow people to undo a hack.
I was going to ask you about that, because I heard you say that, but didn't fully get it. But that is big. That is big.
Part of the problem with like how crypto operates today is that the money is available now. And so anybody who has your 12 secret words, and anybody that you accidentally give that to, or anybody that like creates a trap and you click on it and it then you end up approving something that you don't understand. These are situations where somebody can get access to your funds, and they can send the money before you even realized that you've been hacked. The innovation that I'm introducing is that through smart contracts being the ones owning the crypto for you, you own the vault, and the vault owns the crypto. The vault has a rule that says that you have to make a withdrawal request a week ahead of time.
Ah, okay.
And so that gives you a week to notice a notification that a hacker tried to withdraw something and it wasn't you.
And then what do you do?
Gives you time. Before the hacker can move the funds, they have to announce to the smart contract that they want to move the funds.
Okay.
And so you can catch them in the act, because it takes a whole week for the withdrawal request to be approved by the smart contract, because it has to time out. During that whole week, you're able to then run code that we've built into the vault that says, actually, I'm going to switch the ownership of this vault to a different address that I pre-selected.
Okay.
That has a different seed phrase. And so it's the ability to disable your own seed words, because the hacker is never going to take your seed words and then flip the switch to give somebody else control. But you would do that if you got hacked.
Wait, why wouldn't the hacker do the same thing?
Because they wouldn't choose an address that you pre-selected. So for example, I could use my own cold storage wallet that's different than my hot wallet, or I could use a relative. I could use, like a family member's address as the recovery address. And so the hacker isn't going to know who I used necessarily. And the hacker who's not the person, this doesn't work if the person you pick is your backup.
Yeah.
Is the hacker, right? But
yeah.
But in the more common situations where, or if you lose your seed phrase, then you might be able to use our recovery function. Just like if you got hacked, you can, there are going to be ways that people can change the ownership of the drip and the time lock. But the difference between what exists now with Gnosis Safe is you have to share ownership from the beginning if you want other people to need to sign off on something. And in Time Pays Me, you can wait until you get hacked to give control to somebody else instead of giving it ahead of time. And that's more what crypto is supposed to be about. It's like,
so essentially the hacker would have to get both seed phrases, and that's pretty much impossible. It's
not impossible, but it would be a whole lot harder.
A whole lot harder. It makes it that much more complicated. That's very interesting. That is, so this is novel in crypto. This is like actually innovative. Like this is very paradigmatic shifting.
This is something the dev that I'm working with and I invented.
Yeah. Well, so is there broader plans of possibly something that really like kind of gives me a little bit of anxiety, like nothing serious, but like the fact that if someone ever gets their eyes on my seed phrase and it's locked up for 15 years in Hex, like, it's game over. Is there some way of maybe implementing that technology to Hex? either for new staker, like people making new staking ladders, or that already currently staked? Yeah, that's the question I would ask.
For new staking, and that might be something that we do with our V2 version, would be to add the code that's needed to allow Hex to still get your yield and be able to recover from a hacker. But right now, we're focusing on PulseChain and PulseX tokens, and then our I don't know if I want to say goal because there's no expectations. Our vision,
no expectations goal.
Our vision is that we'll be able to expand Time Pays Me to all ERC and PRC20 tokens.
Wow, that would be interesting. And considering Hex's compound growth as a community, I'm saying I think in maybe like now it's sort of a small niche, but if Hex goes where we think it's going to go, and you being one of the OGs bringing this technology to the forefront, it could get adopted pretty quickly.
It'll be really interesting to see. You know, somebody could try to you know, steal the idea and stuff, but at the end of the day, you can't copy a community. And
that's true.
Yeah, who's gonna trust me?
Exactly. That is a big thing. Yeah, I would want you to speak about that. Just integrity, you know, and trust. I think that's so important, especially as a crypto influencer. I think people, like, some people are just so trigger happy to just bring these new tokens in front of people, you know, whether being paid or not, and they don't consider that this is people's money you're dealing with. You know, people this can ruin marriages. You know, these rug pulls that could cause suicidal tendencies in people. It's like such a serious thing. And then you have these guys that just every day it's a new coin, buy this, buy that. And I mean, and I guess it plays out in the short run if you're covering the next hot thing, you know, the next hot cake, like everybody wants to see it. But in the long run, I mean, it could really have severe consequences. Would you want to speak about that a little bit?
Yeah. I think being an influencer is like the wrong framing for me. For me, I consider myself to be a broadcaster, somebody who's literally practicing free speech, who's practicing education, who follows the law. And, you know, so that all is really important to me. And then I make a distinction between like me doing my best as a broadcaster and sticking to my values of wanting to address like a bigger problem than am I rich or not. Like, I think that the end goal for me in crypto is to see people unlocking the power of being able to pay themselves to change their own behavior, not just with saving for the future, but also maybe you pay yourself with a smart contract to quit smoking tobacco, or to eat healthier, or to start going to the gym, or to take more steps in your day so you're less depressed. Like, I could really see how that could unlock a new world of productivity for the world if people woke up one day and had a tool to become more motivated, to be more self-directed in their ability to like to choose, you know, to choose their own behavior, right? Changing behavior, like, that's a really hard thing to do. And at the same time, like, many of the people in the world today, like, are incentivized to do jobs that they don't love because they're getting paid for it. So if you could pay yourself to change behaviors, either to stop bad habits or to start good habits, I think that could go beyond just the good habit of saving for the future, the good habit of delaying gratification, that it could expand much greater than just the application of money.
Interesting. Yeah, it's you're thinking big for sure. I guess I was thinking about one thing bringing up before I brought up mental health. Are you squeezed for time? I don't want to.
I am good.
Okay. Good. So sudden wealth syndrome. We in the Hex community are hoping that we will get wealthy suddenly. You know, I mean, that's what crypto really is about. It's about making a lot of money. But obviously, you being that you did get wealthy suddenly as a Hex OG, and you're a therapist and a neuroscientist, you would know quite a bit about sudden wealth syndrome, and I guess the negative things that could happen with people getting rich very quickly. Would you be able to speak on that?
Yeah. So I mean, sudden wealth syndrome is something that people started asking me about a lot, and so I looked into it before I even started experiencing it myself. It's this collection of reactions that people can have to, like, for example, before crypto was around, it would be you won the lottery.
Yeah.
It would be you got a huge inheritance or a settlement or something. And there is a misconception out there on the percentage of people that like look back and they say, oh no, I wasted everything that I got. Like I went from being poor to rich to poor again. It's actually not the majority of people. So the majority of people who win the lottery and get a big inheritance suddenly, the majority of people make it last longer than you would think. And then there's maybe about like 20% of people who maybe 15 to 20% of people who they're the ones you hear about that they go from rags to riches and then homeless again. And so there's a huge variability in the behavior that you see. Like, if you take the average person who's getting sudden wealth syndrome, like they're experiencing more of like an adjustment disorder. And the adjustment that they're making is what do I do with myself? What is my meaning going to be now that I am not living paycheck to paycheck? And there's this like weird burden that's lifted. It's not all positive. There's a really positive aspect to it, but then there are also periods where it's like existential dread. Like, what am I going to do with my life now? How am I going to make meaning now that I don't have the same struggles as I did? And then you start to like struggle with just like rich people problems and have to keep yourself in check there too.
What do you mean by that? Like, elaborate.
Like if you don't have anything to complain about, you might start complaining about things you didn't even notice before.
Yeah. Okay. Fair enough.
And you just have to check in with yourself, and you have to like stay grounded and like practice gratitude. And another area, like socially, is when like some people, when they win the lottery, they just tell everybody in their life, and then everybody in their life is just like feeling left behind, because now this person can travel the world and doesn't have to work and doesn't have like the same relatable problems as everybody else does. And so that's something to navigate, to be like, okay, I need to go about like telling people slowly and like get good at understanding how that's going to change my friendships and relationships and stuff like that. All that good kind of stuff. People freak out that they will get that their sudden wealth will evaporate just as quickly as it came. And so some people get preoccupied with looking at charts, or start trading more than they did before. They start changing how they're going about things. That's pretty common. Some people get paranoid. Some people get anxious. Some people disassociate. The majority of the people have a touch of those things, depression, or like doing like more manic, like unsustainable things. But I mean, the majority of people get a tiny little bit of all those things and then just adjust to it over time.
So I guess, would you be able to would you be able to like tell us how that kind of unfolded and how you dealt with that, and how your what would you tell people that you wish that you would have been told when that happened for you, kind of thing?
Yeah, great question. So I've kept people in my life who keep me grounded, and I practice what I preach with like self-care skills for my days of being a therapist. So checking in with myself and like working on my own self-improvement like is something that needs to be done no matter how much money you have. And so just kind of, and then, just also having a community of people and giving back is another way that I have found to make meaning in my life. Is like, I'm super dedicated to every Tuesday and Thursday night for the past 101 weeks. I've done a stream.
Yeah.
And
And it means a lot to us, like probably more than you would even
Cool.
think, like that you're there for us. I'm saying, and you don't have to be there. You already been in Hex, and it's just, that's the thing about though, like people that have been in there, like they don't need to work anymore. I mean, they could now start delegating their time for more philanthropic things, and you know what I'm saying?
Yeah. So there's been it's been really great to be a part of the Hex community, because a lot of the normal sun well syndrome is a little bit less. I'm time locked, so I don't have to worry about screwing it up as bad. Like, if Hex does well, then I will be good. If Hex doesn't do well, then I have some money on the sidelines, and otherwise I'm learning lots of new skills that could, it's not like I'm not working. I like to say that I'm retired, and then I work more than I've ever worked in my life.
Yeah. You're working for us. You're bringing us the content now.
For the cause. Yeah. Cause I'm doing the online conferences. I did a physical conference that had 600 people show up. And then I do the weekly streams, and now I'm creating a DeFi product. So
yeah,
it's plenty. And self-care, it's all a full-time job.
It is a full-time job. Yeah. And we appreciate it. And I hope I could get in that, you're doing the YouTubers conference thing.
Yeah, that's right. So I hosted the first online Hex conference back in January 2020. The second annual one was in 2021. And now in about 2 months, we're going to have on January 6th through 9th, we'll have the third annual hexconference.com.
Oh, wow.
And so I'll be releasing the details of that pretty soon. I put out a blog post, and people can stay up to date with like everything I'm working on by going to allmylinks.com/all-in, or looking at Maddie Allin on like YouTube or Twitter. It's MATIALLIN.
And okay, definitely going to check that out. And I'm obviously very excited for the conference. You also have an on-chain analytics course. Tell us about that.
Yeah, chain analysis 101 is also at all my links, and it'll take you to I got a couple different links on there for people going. It's a 4-video course for free, and it's I think each one is like maybe an hour and a half to 2 hours, and it will teach you how to do chain analysis.
That's important. All right. And I guess mental health, your expertise, and it's so important, considering like the brain and how complicated it is. I guess my question is, so the first tip I heard from you about mental health was omega-3s. Yeah, that, and I started taking them. And
How's it
it
going?
definitely excellent. It's
Awesome.
excellent. It's great for, your concentration, mood, things like that, and also skin.
Yes.
So so would you be able to share with us, some other, you know, uh important things that we could implement, not just supplements, just, you know, like mindset, actions, things like that, crucial to improving the quality of life, our
Sure.
quality of
Yeah,
life.
I'd be happy to. I love that you're asking me a mental health question because I'm very passionate about sharing tips and tricks, um, and anything I can. So the reason why omega-3 is like the number one thing that I tell people, if there's one thing you can learn from me, and I hope it's not just one thing, but if there's one thing, it's to take omega-369. And the reason for that is because it's the material that your brain needs in order to insulate the electrical wires in your brain. And I learned from my days as a neuroscientist and my days as a substance abuse therapist that this stuff rocks, whether you have a history of mental illness or substance abuse or none of the above. It seems to make a big difference in people who don't have it already in their diet, eating enough fish and that sort of stuff. And so for me, I uh, I started taking the omega-369, and
So
it took
what's 6 9? Is that different
um
than regular threes?
yeah, it's like a lot of people, they can just start out on omega-3.
Hmm.
Omega-6 is already in like a lot of the food that we eat. And then omega-9 is like people could use that a little bit. And so whether people start out, I mean, it's like a $5 bottle per month from like Walmart or a grocery store or any pharmacy and that sort of thing. Um, and typically it's like if you're not on blood pressure medicine, then this is part of the normal human diet that people are missing. Um, but check with your doctor if you're not sure. And yeah, and so when I started taking omega-369, it was I was just practicing what I preach, and like I had told some clients that maybe this could help them, and then I noticed that I was thinking more clearly, I was more motivated, I was like just just starting to take control of all these other behaviors that weren't in line in my life, like being able to sleep better. And then I was able to have the energy to exercise and the motivation to exercise. And then I started sleeping even better. And then I could concentrate and start developing my hobbies and interests to um, to have like a small business and to be better at problem solving and have more control over my mood and stuff. So it's like all these things just fell into place, and I saw that too with the hundreds of people that I ended up recommending it to as a therapist. And I got to see like the people who didn't start it, and then they kept going for like months and months in therapy, and then they started it finally,
Oh,
and then boom, there were literally 3 people who went from being homeless to getting straight A's in college.
wow. No, that is
And
fascinating.
part of what they attributed it to in the end was omega-3 and therapy. And so um so it's yeah, it's a really good idea for people. And normally it's in between like a week or a month of taking it, people notice it's a noticeable difference. Most vitamins, you take vitamins and you're like, I feel healthier because I'm taking better care of myself, but it's not like I notice that
Yeah.
I'm thinking more clearly. So that's my big endorsement for omega-3.
Is there a
And
certain brand, so we know that we could be taking the
I
same omega?
I started off with just like the Sam's Club brand of omega-369.
Is there a dosage though?
And I started off with 1,000 milligrams per day with food, and then after a week, I did uh, like 2,000 milligrams per day with food, and so yes, that's like that's what got me started on really believing that I could change my own behavior, which is like, it's wild that I was already a therapist who tried to change people's behavior. And then it took this exact example of just how cool the connection is between, you know, I can tell you that the brain cells, you know, that are needing the omega-3 the most. It's like, so there's the oligodendrocytes that are the support cells in the brain that that myelinate the axons. So that the myelin sheath is like what the omega-3 gets turned into, and so it's like there's this deep technical neuroscience understanding of things, and then it actually translates to behavior, and it actually is noticeable for people, and that's enough. Just like a little win for people is enough to like inspire all this hope that then can bring people to the next tiny change that they can make, that reinforces that that belief that you can self-improve.
Interesting. That is interesting. It's like just you kind of build confidence with that change, and then based off that, it could really take you places.
Yeah.
Very interesting.
And so if you want, like, you know, if you want like the next thing to try,
yes,
like,
yes,
a good one, let's see, one good one to try is so like a lot of people, part of the confidence that we need to like live our lives, and part of the belief in ourselves, seems a little bit subconscious. And when I talk about like esteeming yourself, like having self-esteem, normally the way that I realized people were thinking about self-esteem is that it's like something that you have or you don't have.
Yeah.
And the way that I challenge people to look at it is to look at self-esteem as an action verb. And so it's something that you do, not something that you have. And the way that you do it is by like speaking highly of yourself, complimenting yourself, you know, and having that positive self-talk that is so easy to forget to do, that even as a therapist teaching people how to do it on a weekly basis, sometimes I would not actually do it myself.
Mm-hmm.
And so one of the life hacks, I guess I could say about that is that there's this really interesting relationship between self-esteem and self-care. And I believe that one of the ways to change your subconscious beliefs about yourself, even if they're already okay, is that to combine walking the walk and talking the talk at the same time. So like I observed working with hundreds of people for over 10,000 hours in therapy sessions, I realized that it was fine if people like esteem themselves, like that is kind of cool. And it's also kind of cool when people like take care of themselves, like any form of self-care that's done intentionally is like that improves people's mental health. So like you get a new style, or you get a new haircut, or you do a pleasurable activity, like you listen to your favorite music that you haven't listened to, or you make your favorite meal, whatever it is that you could be doing for yourself, like you exercise, or you you know, like you're doing something to like recharge yourself and to you know, just like you would take care of somebody else, you're taking care of yourself. What I found was that when people combine self-esteem and self-care at the same time, it reinforces at a subconscious level what you're doing. So like you could tell, like I would tell people, like, give yourself a compliment, and they would give themselves a compliment, but they wouldn't believe it. And then I would tell people it's like, take care of themselves. And they would do some form of self-care, but they wouldn't like register it as like, I'm the kind of person who takes care of myself. And so when people combined, like, for example, saying like, I'm going to make my favorite meal for myself because I'm worth it, because I deserve it, because I'm a good person. Like when you combine walking the walk and talking the talk at the same time, it really has this powerful effect to motivate people and to, you know, like to kind of give them the next skill that's really going to be noticeable. And so, so I would challenge you and anybody else who's been doing an omega-3 challenge for themselves would be to like, when you take your omega-3, like give yourself a compliment. And you can even look up a list of like positive words on Google and then just pick one of those. Or another thing people can do is to like set a reminder on their phone for every day at the same time. When you combine the self-care and the self-esteem, I've found that that's been the most powerful thing to give people that positivity and the self-worth that can make a difference in lots of areas of your life.
So it's like you give yourself the compliment and reward yourself. So it's like, what's an example? I guess.
Yeah. So you take the omega-3 and you're like, I'm taking this because I deserve to be healthy.
Oh, so you're making yourself healthy and you're calling yourself someone deserving of being healthy. So it's
I'm making myself my favorite meal because I'm worth it, because I deserve it, because I'm positive, I'm outgoing, I'm friendly, I'm courteous, kind, obedient, cheerful, thrifty, brave, clean, reverent, blah blah blah,
and a good cook. So
there you go.
You're saying you're a good
Even
cook,
better.
and then you're rewarding yourself with the food that you made. It's like a feedback loop.
Yeah. And you're giving your subconscious
it's validation
evidence. Yes, it's validating, and it's the evidence that what you're saying is true. You could say positive things to yourself and there's no proof to yourself that it's true. But when people do self-care and self-esteem at the same time, they're proving it to themselves whether they believe it or not.
Yeah. It's like I like your shave.
Yeah.
And you shave.
Yes.
Yeah.
Yeah, exactly.
Interesting. Okay, that's good. We'll take that to heart and try and implement that.
Awesome.
I guess the last thing I wanted to ask you before we wrap it up was for some hopium, because you've been through a lot in terms of price volatility. But a lot of people, hopefully a lot of people watch this video, haven't been through as much as you've been through. What would you tell them in terms of like, you know, they're down a lot, 90%?
I've never seen a community that continued to get as much engagement through the bear market or any market. Hexologist just the other day ratioed Reuters News, who has 25 million followers on Twitter, and he with only 25,000 or somewhere around there. Like, it wasn't just, and it was on the topic of CZ of Binance, who owns CoinMarketCap, who's been gatekeeping Hex. Like, it wasn't just Hexologist like got a little bit more. It was like Reuters, when I looked, got 150 likes.
Wow.
And Hexologist got like 750. And so there's because of the time locking in Hex, there's this huge group of people that stuck around in the bear market, and otherwise, you know, I think that we wouldn't have as bright of a future on the community side of things. And then so that's some hopium there. And then I've also never seen such innovative products as we have seen designed when it comes to PulseChain, PulseX, and Time Pays Me. And so that's the hopium, is that that we're really innovating, and I think there's a possibility on a technological level to take a leap forward in crypto, and then we'll see how that does.
Yeah, absolutely. That is very true. The Hex community is second to none because, I mean, the community metric is important, but there's always the possibility that, okay, the community's there, price drops, maybe they're there, maybe they're not. But like you locked in 10, 15 years, you're not going anywhere. Anyway, yeah. But yeah, thank you so much for like all the time you've taken. I didn't say this in the beginning. I don't know. I just got a little, I guess, like, blanked out because this is my first time, making an unedited video and doing an interview. You were the first, YouTuber and, major influencer. I don't know. You said you're not an influencer.
Broadcaster.
First broadcaster, to promote me, because I put up a video and you wrote in the comments, subscribed, and then I was watching your show. Normally I don't comment in the comment section because I'm only logged on my laptop, not my phone. So I watch it on my phone. So I am watching you, but I was like, let me send a super chat. And I didn't want to, plug my show there. I didn't want to put you on the spot. So I thank you for the Omega 3s. And then you brought my channel onto your screen share. And I really appreciated that, and I obviously really appreciate your content. It's top notch. Hex Therapy is awesome, and can't wait to see what you're going to bring with Time Pays. And thank you so much for your time. Really, it was so enjoyable talking to you.
Hey, I've got to admit, like seeing people of your caliber coming in and starting YouTube channels has been very inspiring for me. And so, yeah, keep up the good work.
Thank you so much. All right.